Hello and welcome back to this Money Controls live stream. You're watching Closing Bell with me, Lovisha Darad. And after last week's rally, today the market is seeing a bit of a breather. If you look at the benchmark indices, it's still trading in the red. Sensex down about 200 points and Nifty has also slipped below that 25,250 mark. But however, it's off its day's low at this point of time because it's down about by 68 points as of now. But yes, all the sectoral indices, if you take a look, majority of them have plunged into the sea of red, barring your Nifty, media, and the PSU and the private banking packs, which are seeing some marginal bit of gains at this point of time. But yes, Nifty IT index, that seems to be the top sectoral laggard of the day, nearly a 0.8% cut coming in for the IT index, and it's continuing its loss for the second consecutive session as well. So yes, now all eyes will be on the HCL Tech second quarter results as well, because brokerages have been expecting about a modest 3% sequential increase in revenue, while profit is expected to rise up to 9%, driven by the deal ramp-ups as well. Margins, however, are also expected to improve on a sequential basis despite the restructuring costs, which is being done on the cost of generative AI as well. So we'll watch out more for the commentary on its AI-related plans after we did see that TCS big pivot of AI to build up the data center as well. But yes, apart from IT, we also had the Nifty Consumer Durables Index, which also reeled under the pressure. The sector did see a cut of about 0.8%, and this comes after the sector has been up to a 7 days of consecutive rally, and that is why we can see some profit booking which has emerged on the counter as well. Apart from these two indices, Nifty Pharma Index has also succumbed to some of the selling pressure, 0.2% declines coming in from there. FMCG pocket is seeing some bit of a strain, 1% decline coming in for there as well. Let's take a look at some of the top gainers and losers of the day, however. Adani Ports doing well in the trade, 2% gains coming in for the counter. Bajaj Auto also doing well with about 1% gains. Bajaj Finance doing well with 1% gains. Interglobe Aviation with about nearly 1% gains. Shriram Finance also doing well with about 1% gains. However, on the flip side, let's take a look what's not doing well. Tata Motors seeing a cut of about 3%. Infosys not doing well with about 2% loss. HUL, 1% loss coming in for there as well. Wipro and Nestle, some of the other losers on the Nifty 50. But yes, we also had a big listing today. That is your Tata Capital. It listed flat on the bosses, and right now also the stock remains sideways at this point of time. We'll watch out how the stock moves in the next couple of sessions as well. But for now, let's quickly decode on how the last minute's trade look like, what the way forward is. Joining me is technical expert of the show, Rajesh Bhosale of Angel One, to help you understand what the market looks like. Rajesh, good afternoon. Nifty down after 2 days of gains. We have tepid global cues that we did start off with, but what are the next levels that we can watch out for?
Hi, afternoon, and thank you for having me on your show. Yes, so definitely we are seeing some tentative start for the week, but it's mainly due to the geopolitical concern. But if we consider the price structure, last week we had a very strong closing. Price close above all the key averages and retracement levels, and that is the reason why even after a weak opening, we are not seeing a major follow up sell off, and we have recovered recovered a lot from the lower levels. So buy on dip would continue, and on the lower side, if we see 25,100 to 25,000 is a very strong support. A bunch of key averages are there. So as long these support holds, we have a positive bias. One interesting thing is the bank nifty is doing very strong. It is in fact trading flat, and it almost tested the Friday's swing high. So banking space is what we are expecting the outperformance to continue, and it will pull the nifty higher back towards the 25,350 to 25,400 mark. Having considering this, we would have a buy on dip approach with 25,100, 25,000 as a key support zone.
Okay, Rajesh, you did mention about the Bank Nifty Index, so showing some resilience in today's market. But anything that you're watching out from this space, because we do have some private lenders which will be reporting its results this week. Axis Bank, HDFC Bank, ICICI Bank, all of them with their September quarter results. How do they look on the charts as of now?
So if we see the entire rally that we have witnessed in the banking space from the October August swing low, the major driver was the Axis Bank, and in fact Axis Bank has corrected a bit in the last 1 week, but it is holding on to a strong bullish gap. And on the 20 EMA, today we are seeing a higher bottom formation, and some kind of resumption of signal is visible on the Axis Bank. So we are recommending Axis Bank today. We are expecting the upside to continue for the targets of 1240, and on the downside 20 EMA around 1165 can be kept as a stop loss.
Okay, all right. That's the view coming in for Axis Bank. Let's get in your views on the IT index also because it's down for the second consecutive session. We did see TCS results which came out on Friday, and today also we are expected to see HCL Tech which will be coming out with its results. What do you expect? Can we expect more downside in the upcoming days, or how are we poised?
So talking about HCL Tech has fairly performed well as compared to other IT packs, and now it's placed around crucial levels. So somewhere around 1500, if we see August and September swing high, it is just trading around those levels ahead of the result. So tomorrow's opening will be very crucial. If prices continue to sustain above 1500, then possibly this move can extend towards 1600. If not, some kind of dip can be seen towards 1440 level. So tomorrow 1500 will be the make or break for the HCL Tech. As compared to if we see other IT packs, TCS or Infosys, not much is happening on the lower levels. But if we see some kind of reversal is there, and if we see TCS, if it crosses back above 3100 levels, then positive momentum can be triggered towards 3300. So wait and watch approach should be there for the IT space.
Okay, wait approach should be there for the IT space. But yes, since we are talking about the results as well, where we expect HCL Tech to report its numbers soon enough, let's also talk about ICICI Prudential Life, which will be coming out with its September quarter results tomorrow as well. Today, the stock, however, has not been doing well. Year-to-date performance also shows that the stock has been seeing about 10% cut itself. But yes, Rajesh, how are you placed on ICICI Prudential Life, and how does the chart look like for the near-term trajectory?
Also, if we see charts of ICICI Pro for the last 1 month, not much has happened. During the month of June, there was a bullish gap left, and around those bullish gap levels, prices are forming some kind of base. But for the positive momentum to trigger, prices will need to cross 610 levels, which is its recent swing high, and also the 200 DMA. So even on the ICICI Pro, we will have a buy, wait and watch approach. Once it crosses 610, then we can expect some momentum towards 640 to 650. Those who are already having long can keep a stock plus of 580, that is the recent swing low and the bullish gap support.
Okay, all right. That's the ICICI Prudential. Let's get into your views on the pharma index also, because the sector also came under pressure today. 2 days of consecutive gains, and both of those gains have been snapped today. If you look at the pharma index, it's showcasing a decline of nearly 0.2% as of now. But yes, Rajesh, what is your view on the counter? We've seen some tariff relief that came in for the sector as well, and some reports of US Biosecure Act, which also got enacted. And as of a result, we saw plenty of CDMO stocks took the rise.
Yeah, they are pharma space are trading flat, but what kind of that kind of structure last week we have some kind of positive bias on this space because a bottom out formation is witnessed in heavyweight counters. If you see a chart of Sun Pharma, the stock has formed a double bottom around 1560 levels, and last week we had seen a that bullish breakout. So we expect Sun Pharma to move towards the levels of 1750 to 780 levels, and on the lower side a bullish kicking formation was witnessed. So that low of the pattern around 1630 would be the stop loss. So we have a positive view on the Sun Pharma. Similarly, if we see Dr. Reddy, not much is happening, but it's trading around 200 DMA. So as long it holds the levels of 1230, we are expecting a bounce back. Not much, but possibly 1270 to 1280 can be expected. The last counter that's look promising is Lupin. Lupin is in fact up in today's session. Even on this chart, we are seeing a double bottom formation, and as long it holds the levels of 1900, we expect a bounce back in the Lupin. Possibly towards the 2000 to 2050 levels. So all these counters are showing bottom out formation, and as long they hold key support levels, we expect a bounce back in this space.
Okay, some bounce back could be anticipated for the pharma counter, so we'll watch out for the space in the upcoming sessions as well. But let's talk about consumer durables index because that didn't do well today. Some profit booking was seen on the counter. We can see the likes of Century Ply seeing a decline of about 3%, Volta seeing a decline of about nearly 3%, Blue Star, Havels, some of the other top losers from the index as well. Rajesh, what do you see from the space? Because we saw 7 days of consecutive rally. Today we're seeing some profit booking, but anything that you're liking from the space?
Yeah, so recently we had seen some traction in this space after the GST 2.0 announcement. But if you see the broader chart structure, they have not done much. And in fact, any bounce is getting sold into. So we will have a wait and watch approach. As long there is a concrete reversal sign, we'll have a award view on this space.
Okay, avoid view on this particular space for now. Let's also get in your view for Nifty FMCG index, because that's the that index is also seeing some bit of a pressure in today's trading session. What are you liking from this space? We are headed away for the festive season itself, but Rajesh, anything that you're watching out from the FMCG basket?
So if you see, even this space is an underperforming one, but the thing is, it's currently trading around key averages, and it's placed around the August swing lows where we had seen a sharp move. So at current levels, we are seeing some pockets where a good risk reward is seen. So actually, if you see, during the month of August, there was a sharp rally from the levels of around 2450 towards 2750, and this level also coincides with 89 EMA. So one can have a contra bet at current levels considering the risk reward levels. 2430 would be the stop loss, and in the near term a bounce back can be expected towards 2600 levels. So second buy call, or you can expect a contra bit is on the Dabur. Similarly, similar to the HUL, Dabur also had a strong move during the June month from the levels of 470. It had a strong rally towards 570. Prices are approximately trading around those levels. Last week we did see a reversal. Today it is under pressure. But considering the reversal formation last week we saw, one can have a positive approach. 470 would be the stop loss, and on the high side one can expect bounce towards 510 to 520 levels.
Okay, all right. That is the view coming in from the FMCG basket. Now let's talk some of the individual movers today, because let's talk about Avenue Supermarts. That stock slipped in today's trading session. It's seeing a cut of about 2.5%. We did see that the company reported about 15% year-on-year growth in consolidated revenue, whereas EBITDA softened on a year-on-year perspective, and even profit after tax declined due to higher depreciations costs. Brokerages have also remained quite cautious on the counter. We did see early in the morning HSBC giving out a reduced rating, Morgan Stanley giving out an equal weight rating, describing the second quarter performance as a miss. Rajesh, what is the next support level which we can watch out for? 3% decline coming in for the counter.
So for now the next support would be around the 200 DMA that is placed around 4070 levels. Along with that, the concrete support would be around the 3900 levels. During the fag end of the July month, we saw a sharp rally from the levels of 3900 3950 levels. From there the stock had a 1000 points rally. So once again, when the prices retest around these levels, we can expect some respite. So 39 to 3950 would be the key levels to watch in the coming weeks.
Okay, 3950 is the key level to watch for DMart, and that's what we'll be watching out for. Let's discuss about the top Nifty gainer today. That is your Adani Ports. The stock is at day's high level, 2% gains coming in for the counter. We did see an interesting brokerage note where Investec had initiated a buy coverage on the counter, saying that they find companies' valuations quite attractive at the current levels, and the stock has a good runway going ahead as well. Stock is showing good momentum. Rajesh, what is your perspective? The stock has done well so far this year as well, but today also the stock has been doing quite well. Can the momentum continue?
So yes, we are seeing strong traction. In fact, last 2 weeks has been taken out, and kind of inverse head and shoulder pattern is witnessed on the daily chart. The prices are holding on to its 89 EMA. So we expect the outperformance to continue. Possibly 1520 to 1530 can be expect. The entire Adani space look good. If we consider Adani Ports, support base is formed around 1380, and as long this holds, we expect 1520 to 1530 to be expected in the coming weeks.
Okay, all right. Let's take some realty stocks also in focus. We have Signature Global, Mahindra Life, and Phoenix Mills. They all came out with their important updates over the weekend. We did see Signature Global and Phoenix Mills reported their business updates for the quarter, while Mahindra Life said that it had acquired a land parcel in Pune. If you look at Signature Global, that reported about 28% decline in pre-sales for the second quarter. However, the company's collections increased by about 2% from last year as well. Mahindra, if you look at Phoenix Mills, that retail consumption across all operational malls increased by about 13% in the September quarter from previous year and 12% in the first half of the financial year 2026. Today, the stock has been doing well. 2% gains coming in for the counter. Mahindra Life has been also holding up well in the green. But yes, Rajesh, how do you see all of these three counters, Signature, Phoenix, and we had Mahindra Life as well?
So if we talk about Signature Global, so similar structure we was seen during the March month, where the prices tested levels of 1,000 levels, and from there on there was a sharp rally towards the 1280 to 1300 level. So I mean Friday was as well we saw morning star pattern, and a follow-up buying is seen in today's session. So as long the 1,000 levels hold, we can have a positive bias. In the near term, the stock can bounce towards 1120 levels. But the one counter that we are strongly bullish is on the Phoenix Mills, because both on the daily as well as weekly chart we are seeing a positive structure. On the daily chart we are seeing a cup and handle pattern, whereas on the weekly chart we are seeing a symmetrical pattern breakout. Considering the multi time frame, we are expecting strong performance in the Phoenix Mill. Possibly 1750 to 1780 can be expected. So from this space, we would focus more on the Phoenix Mills.
Okay, Phoenix Mills is one particular stock that you'll be focusing going forward from the realty space. Let's talk about another stock in focus which has been doing quite well today. That is your MapMy India. The stock surged as much as 10%. Right now, the stock is up about 4.5%. We did see some reports where there was a potential integration with the RTI, and that is where the stock has done quite well today. 4.5% gains coming in for the counter. Rajesh, let's get in your view. I mean, the stock has been seeing good momentum today, and it's a good breakout day for the stock as well. What can we expect next?
Yeah, the stock has definitely done well in today's session, but we will have a wait and watch approach, because what we are seeing is that from the higher levels, some kind of dip has happened. In fact, this dip is exactly from the bearish gap that is left in the June and from the August swing high. So as long it doesn't concrete closes above 1850, we would have a wait and watch approach. But those who are having can continue to hold with the stop loss of today, where a bullish gap is left. So 1730 would be the stop loss, and on the high side 1850 would be the immediate resistance. Once that is crossed, then the confirmation will be there for the levels of 2000 levels.
Okay, 2000 levels, that is what we need to watch out for MapMy India as well. But a wait and watch approach, that's what you're advising as of now. All right, let's take another stock in focus. That is your Eicher Motors. The stock is not doing well, but Jefferies did give out a buy call on the counter, and the highest target price, which is there on the street, of about 8,000 rupees per share. Well, now, what the brokerage has written is that after a flat of 12-month period, Royal Enfield registrations have grown by about 14% on a year-on-year basis in the second half of FY25 and 23% in the first half of FY26 as well. They've also upgraded its EPS estimates for FY26 to 28 itself. Rajesh, what is your view on the counter? The stock has seen stellar performance, but right now it has been consolidating at a higher range. What is the next levels that we can watch out for?
Yeah, so definitely the stock had a stellar move during the July. It was trading somewhere around 50 to 50, and now it's quoting somewhere around 7,000. So already a stellar move. We are seeing some time-wise consolidation, maybe some price-wise correction can also come, but somewhere around 6750, 6700 levels, strong base formation is happening. So if in case there is any dip can be bought. We are expecting targets, reciprocal targets, possibly towards 8,000 levels in the coming months. So buy on dip would be the approach. 6,700 would be the stop loss, and on the high side, 7,500 to 8,000 levels we are expecting.
Okay, 1,000 levels is from your perspective also for Eicher Motors. So that's quite a positive call coming in for the automaker. All right, let's shift focus and talk about Waaree Renewable Energies. The stock has been seeing good momentum today after the company posted a strong set of results for the September quarter. If you look at the numbers, revenue for the quarter has risen by about 48% year on year. EBITDA more than doubled. And all in all, it was a very strong quarter for Waaree Renewables. Rajesh, the stock has seen a good breakout today on the back of strong Q2 performance. What can we expect next?
Again, a counter where we'll have a wait and watch approach, but because from the higher levels, the prices are not sustaining its gain. So we'll have a wait and watch approach. But yes, definitely fresh new highs and the prices are in momentum. So those who are holding can hold with today's low as a stop loss. 1160 would be the stop loss, and in the near term, if the positive momentum continues, 1320 to 1350 would be the target. But fresh longs would be avoided, considering the counter is very volatile.
Okay, all right. All right, a volatile counter. Let's take another stock in focus, that is your Interglobe Aviation. The stock has seen good momentum despite the JM Financial downgrade of the counter to a reduced rating, citing that some increased fuel cost and a weak rupee is expected to adversely impact its second quarter earnings as well. Now, the brokerage has also cut the rating to about reduce from hold, and last week also we did see a brokerage note which did caution about the second quarter to be weaker one for FY26. Today, however, the stock is holding up well. Rajesh, the stock did well despite a subdued market sentiment. What can we watch out next for this?
Yeah, despite the negative sentiments, the stock is doing well. In fact, on the daily chart, what we are seeing is a channel breakout after a prolonged 2 to 3 weeks of consolidation. This is a channel breakout, and after this channel, we are expecting a strong move in the coming days. So possibly 6,000 levels can be expected having a positive bias. On the lower side, if we see 5,600 is a base formation, higher bottom structure is there. So as long 5,600 is defended, we are expecting a retest of 6,000 and possibly 6,200 in the coming days.
Okay, 6,200 in the coming days for Indigo. That's a stock in focus. Let's shift focus and talk about Vodafone Idea. There was a news development coming in for the counter, and that's why the stock has reacted negatively to the news after the Supreme Court deferred its plea on AGR dues once again after the centre sought more time. But yes, from a levels perspective, it's a high beta stock, Rajesh, but what are we watching out for?
So yeah, definitely a high beta counter, and generally an underperformer generally moves when there is some positive news, but gets sold into. So we would avoid this counter. Those who are having can keep a stop loss of the recent higher bottom at somewhere around 7 rupees 90 paisa. And once this positive momentum continue, 10 rupees can be expected. So as of now, hold. There are some positive structure, but in the past we have been maintaining a bias of avoid, and we'll continue with that. 8 would be the stop loss, and on the high side, 10 would be the targets for those who are holding.
Okay, 10 is the next target for Vodafone Idea. Let's discuss about another stock in focus, that is your Suzlon. The stock is still down today after JM Financial maintained buy on the counter, but then has also cut the target price to about 66 rupees per share. The stock is flat with a positive bias as of now. And we did see that JM Financial have highlighted that the company is likely to struggle in the maintaining growth momentum from FY28 because of the absence of a scalable diversification as well. Rajesh, quite a negative brokerage view on the counter. The stock is holding up well, but flat with a positive bias. What can we expect? Because the stock has been stuck in a range for quite some time now.
Yeah, I mean, not much is happening in Suzlon in last few months, but if we see the May swing lows, we had seen a strong gap up opening on the 12th May, and post that gap up from the levels of 53, the stock had rallied towards 72 in just 1 month. So a move of 20 points in just 1 month. So prices are retesting those levels. Prices are at the origin point of the previous rally. So some kind of support is there. So as long 51, 52 levels holds, we expect a bounce back. Last three sessions has been well. So 51 would be the stop loss, and on the high side, we expect a move towards the 200 DMA placed around 59 levels.
Okay, all right. That is the view coming in for the counter as well. Suzlon on your stock. But yes, let's take a quick check of the last rates of where we stand and how the market has closed as of now. If you look at the Sensex is still down by about 170 points. Nifty has also closed with about 25,238. That is where we are at, slipped below that 25,300. We have snapped the two-day gains. However, we are still holding above that 25,200 mark as of now. 47 points downtick coming in for the Nifty. We started off well in the red, but right now we're off the day's low, and that's where we have settled at as of now. But yes, from a sectoral perspective, it has been a mixed performance for all the sectors. If you look at the Bank Nifty index has been doing quite well, and that limited the downside in the overall markets today. Bank Nifty settled with about 2.2% gain, and PSU and private banks, both of them did well ahead of some of the numbers which will be expected later in the week. Axis Bank reporting in 2 days, and then over the weekend we have HDFC Bank and ICICI Bank which also be reporting their September quarter results. Other than that, if you look at India Wix, that has seen a sharp rise, 8% gains coming in from the India Wix as well. Some nervousness could be cropping up in the markets given that the global markets did see a rattle after US President Donald Trump's to and fro on 100% tariff threat on China as well. On the other hand, if you look at the broader end of the markets, mid caps, they have settled in the green flat with a positive bias. Small caps down with about 0.1% decline as well. Apart from the broader end of the markets, the sectors which did not do well, that was your Nifty FMCG index, seeing a cut of about 1%. Other than that, Nifty IT index also ahead of some of the key reports of results which is expected today and later in the week as well. Wipro and HCL Tech and Infosys, which is due to report their September quarter results. So ahead of those numbers, we can see a decline of about 0.8%, nearly a percent cut coming in for the tech stocks as well. Consumer durables, like we were talking about earlier, 7 days of gains have been snapped, 0.7% cut coming in there as well. And if you look at the other, that is your Nifty Realty Index, once again, a very sideways momentum continuing for the Realty pack as well. Coming to the top gainers on the top gainers and losers on the Nifty, you can see Adani Ports towering in the trade, 1.5% gains coming in for the counter on the back of brokerage upgrade. Bajaj Finance doing well, 1.5% gains coming in there as well. Bajaj Auto and Shriram Finance, some of the other gainers on the Nifty 50. But if you look at the top losers, that is your Tata Motors, Infosys, HUL and Wipro. Tata Motors, let's take a stock. Getting back to you, Rajesh, because the stock has been on a back-to-back losing streak. And we did see a JLR update coming in for the second quarter as well, and that has further amplified the losing streak as well. What do you expect the next moves to be for Tata Motors? Can we expect more downside?
So what we are seeing that on the weekly chart, the stock is forming a base somewhere around 200 weekly moving average. So as of now, we are seeing prices are stuck in a range. No view as of now. But if prices dips back towards 600 levels, then can be bought. For the momentum traders, the stock need to cross 720. That has been acting as a multiple hurdle. So 720 on the high side, 600 on the lower side. So this is a 120 points range, and one has to play within this range. The momentum will trigger once the 720 is crossed.
Okay, all right. Let's also talk about Max Healthcare. That stock has also been down today after 3 days of consecutive gains. We did see earlier last week itself, Rajesh, that majority of that the government has approved about 2,000 medical procedures, and as a result of that, majority of the hospital stocks also did well. But what is your view on the counter for Max Healthcare?
Yeah, so along with the broader market, it has corrected in today's session. But if we consider last week's formation, we had seen a bullish kicking pattern, and we expect buying to emerge at lower levels. Somewhere around 1100, we see strong support, and on the high side, the recent swing high of 1180 would be the target. So buy on dip would be, suggested. 1100 would be the stop loss.
Okay, all right. All right, just one last question before we let you go, Rajesh. What are your top pick at this hour? I know we discussed a range of stocks, but anything that you're finding interesting right now?
Yeah, so we already discussed Axis Bank. We are liking the banking space, and from that space, Axis Bank has been the puller for the banking space. So Axis Bank today took support of the bullish gap and 20 EMA. It can be bought with a stop loss of 1165 for the targets of 1250. The second buy call is on the Chola Finance. On the daily chart, we can see a strong inverse head and shoulder pattern breakout in today's session. So with a stop loss of 1608, 1710 would be the targets we are expecting in the coming sessions.
Okay, all right. All right. With that thought, we have to let you go, Rajesh. But thank you so much for your time and joining us, and wishing you the best of festivities in advance.
Same. Thank you.
All right, let's take a quick check of the markets. Of course, we have settled in the red. However, if you look at the benchmark index, it's still off its day's lows at this point of time. Both the benchmark indices have staged a good recovery from the day's low, but still we are down in the red, and we have started off this week on a tepid note. We have, as we head in deeper into the earnings season, we have more results which will be piling up this week itself. We have banking majors which will be reporting its September quarter results. Then we have HCL Tech, Infosys, Wipro. All of them will be reporting their Q2 performance as well. And this is what will be shaping the tone of the markets as well. But yes, let's now shift focus and let's talk about our special Diwali segment, that is your fireworks and fallout themes. And today's spotlight will be none other than the defense sector. We'll talk much more based on it, and we'll wait for our guest to join in as well. All right, so yes, we will be touching base upon the defense sector because that has been the flavor and fervor of the investor this Samvat as well. Now, the defense sector that used to once be the heavily import reliant is now emerging to be a global exporter of radar systems and missiles as well. If you look at number wise, if we deconstruct all of that, now the India's defense exports that have seen about 12% increase from FY24 and has grown almost 30-fold from the past decade itself. Now, the government's ambition is quite clear, that is to touch upon that $5 billion in annual exports by 2025 and $500 billion by 2029. So behind this rise is a steady policy push. If you look at the government's initiatives, that is your self-reliance initiatives, indigenization focus, defense corridors, they are all shaping up this ecosystem as well. And that is why you can see Nifty defense that has surged about 26% so far this Samvat as well, and looks like a promising 2082 as well for Samvat. But yes, for investors, this transformation that is creating a new long-term opportunity, and that is why you can see majority of the defense counters, they have seen good momentum in this Samvat as well. If you look at HAL, if you look at Astra Microwave, majority of the counters have seen good gains so far this Samvat as well. But yes, to decode how Samvat 2081 has treated the defense sector and what lies ahead, we'll get shortly with our special guest of the show, who is tracking the length and breadth of this space. We have Amit Anwani, Vice President of Equity Research, Prabhudas, Lilladher, joining us to decode more about this defense sector and what lies ahead as well. Hi Amit, good afternoon. We are wishing you the best of festivities. But yes, Samvat 2081, that has been quite impressive for defense stocks, given that we had some geopolitical tensions from Ukraine to Middle East, and then we had our own Operation Sindoor in May. The pocket has seen quite a lot of interest, but how do you see the next Samvat to pan out? And why don't you reiterate the journey that we have seen for Samvat 2081 too?
Yeah, first of all, happy Diwali in advance to all the viewers. And as you rightly highlighted, structurally, we started a journey 7, 8 years back with defense acquisition policy, defense production policy in place. And of late, very recently, if you see at the start of the year, the government talked about the agenda for the full year that they want to fast track the projects. In December, they came out with the annual plan. And then we saw the technical procurement report, TCPR, which indicates at least 50% higher number of subsystems which government wants to procure over next, 5 to 6 years window. Then there was a policy in September which talked about the streamlining of the procurement manual for ease of procurement by all the stakeholders. On the top of it, if you see, there has been fast tracking. We talked about very recently the 97 LCA getting clearance. Then what I can read is Also, the 30,000 crore QRSAM project also got clearance. So if you see, talking specific again to 2025, there's at least 2,25,000 crores of AUN, approval of necessity, which are approved by ministry to be tendered out, are cleared. And this is across three services. So ballpark, if you ask me, the year gone by with respect to order intakes, order clearances was definitely noticeable. And as we have seen in past 3 years also, there's been very strong intake, but clearly all the commentaries and policy clearances very clearly indicate that the government is looking for next 2-3 more years of reforms in the sector, which will bring in more uh, orders as well for the companies.
Okay, okay. Amit, let's also talk about, but in the past 1 years, we have seen that PSU defense stocks have outperformed the private ones. Do you see this momentum to continue? And what do you like the best, PSU or the private defense?
See, if you notice after Operation Sindoor and many other wars which are happening around, there's been one talk from the Indian Defense Ministry is the modernization of warfare, which requires a lot of defense electronics, as a uh, change which can bring about, let's say, there's a talk about unmanned vehicles and drones and the way the warfare is going to change. But having said that, as you rightly said, the DPSUs are anyways running with a massive order book. So if we talk about 2,50,000 for HL, 75,000 for Bharat Electronics, MDL is also running 40,000 crore order book. And we are not stopping here. We're talking about a very strong order book. The HL is talking about 1 lakh crore more orders in pipeline. Bharat Electronics is talking about very lumpy QRSAM order, and then they can sustain 25,000 crore order. MDL is talking about the three additional submarine order and the large order worth 40-50,000, which is also looking for clearance in shipbuilding. So the prospects are still massive, and I feel the DPSUs can grow more than double digit anyways because of the current order book over next 5 to 7 years. What is changing for private sector is their involvement on technology side, their involvement on modern warfare, where defense electronics or radar based electronics or avionics will see a greater say in terms of value add in the platforms. So I think both the sectors coexist. The DPSUs have their role in terms of the platform development involved, getting more involved with the DRDO. And I think private sector can have faster growth, I would say, being more involved on the startup ecosystem, as well as on the various advancements which are coming in terms of technology in the modern warfare. So I think private sector would have faster growth, but we cannot ignore DPSs for sure.
Okay, okay. But yes, Amit, let's also talk about that, all of these defense measures, they've been sitting on an order book which is 3 times of its current revenues. So how do you see the earnings growth in the coming quarters, and what can be the key challenges?
Right. So talking very specific, let's say for HL, the key challenge has been the engine deliveries, the 41404 engines. And we saw these 4 to 5 months, they have received 4 engines. This year, they're talking about at least 10 deliveries by the end of this year. So versus last year, the supply chain has definitely improved for them. Last year, they delivered 0 aircrafts. This year, they're talking about at least 8 to 10. So the major issue with respect to HL has been the engine supplies. Now talking about the growth, as you said, with 2,50,000 and the kind of order pipeline which we are seeing for HL, I am seeing lumpier FY28, FY29 numbers, since these deliveries will also take a pace along with the helicopter projects. So I am expecting at least 15% plus CAGR in FY28, FY29 for HL. This year it could be between 8 to 10%, and then next year also could be maybe 8 to 10%. But I'm saying back end 12 to 15% growth in the later years, since a lot of deliveries will come for HL. Coming to Bharat Electronics, with the current book and order wins which they have seen, very clearly 16 to 17% growth is possible. For MDL, again, around 15-20% growth is possible basis the current order book. GRSC, not under my coverage, they're also talking about doubling of revenue in next 5-6 years, which indicates at least 13 to 14% growth, which can happen. So all in all, if you gather, there would be on an average for a blended basis, DPSUs can see 13 to 15% growth CAGR, and this is also matching with what the government wants. The government is talking about the procurement number to become, domestic procurement target of 3 lakh crores, which is roughly about 1 lakh 25,000 crores. That has grown at already at 13-14% CAGR in past 3 years. So definitely overall ecosystem will grow at least 13 to 15% for me over the next 5 years.
13 to 15%. That's a good earnings CAGR that we're expecting in the upcoming quarters. But yes, let's talk more about it. Last year we did see some funds which had stopped SIPs into these defense themes because of the bloated valuations. Do you believe that is now
Yeah.
over? And how are you finding valuations at the current juncture?
See, valuation since we are seeing on F27. So talking about the defense electronics spec, which is trading at about 40 to 50x. The private sector companies are trading at 50x. The PSU like Bharat Electronics is trading at 42x on March 27. Talking about other OEMs and electronics like HL, which is trading at about 32, 33x on March 27, and the shipbuilders are also trading between 30 to 35. Now if you compare this on March 27 numbers, definitely the valuations are expensive. There was a sharp correction we saw in past 12-18 months, and now since after the rebound, the stocks has again gone up by 30 to 50%. So definitely I would suggest very selective bets wherever we get opportunity, like HL corrected to the levels of 3,500 also last year. I think that is a very good price to enter. And also, someone who has a longer view, I feel there's still a value. As I said, FY 28, 29, 30 will be lumpier years for especially DPSUs. So we have to be very selective in terms of where the value is and where the valuations correction is going to happen. But currently, definitely, as you rightly highlighted, the valuations on F27s are expensive, and there could be returns, but I think we should be very selective. So currently, HL is something where I see value, which is trading at about 33, 34x, and that is what we are also recommending to our clients.
Okay, okay. Amit, but how are you looking at drone stocks? Plenty of them did see a good rally during Operation Sindoor, but fundamental wise,
Yeah.
can we expect the momentum to continue?
So I think drone space, I think few companies already working, Zentech and Idea Forge. And if you see the large scale defense drone, India as a country has been taking it from Israel. We have Heron and few other which are also there. And as I said, there's been talk of modern warfare which is happening through drone. So a lot of PSU companies, notably HL, is also talking about unmanned combat aerial vehicle, which is kind of larger unmanned vehicle. And I think per se for defense, we are talking about the massive capability building which is going to happen in drone. And in fact, if I recollect rightly, there were few policies also to promote localizations of drones, particularly to defense. So for other areas, obviously, things are picking up fast for commercial agri side. But for defense side, because of technology, I think there's a lot of investment happening there. And it's definitely a very encouraging area. But I think the meaningful traction for defense companies in drone is yet to ramp up. And as I said, notably for me, HL is working on few platforms, and Zentek has also worked on few platforms. But if you see, even for Zentek, the simulations and other training platforms are delivering higher value. So definitely, this is an area where very strong with a very strong potential, and few companies who are working can come up with more products here. But currently, I think for next 1 2 years, I am not seeing major contributions happening here. So this is a watchful space, I would say.
Okay, okay. Watchful space. Let's from drone. Let's talk about shipping stocks also, because recently we did see that the government has approved about 65,000 crore rupees for the sector. So how are you placed on this theme, and what is your outlook going forward?
Right. So I think the 65,000 rupees, if I'm correct, we are going to focus on commercial ships as well, and the maintenance and service of commercial ships as well, particularly to the shipbuilding side for defense. I I see very small things, which are overlapping with the current 65,000 policy. I believe that is more for the commercial side. But having said that, in pockets and with full strength, government has worked towards the shipbuilding sector, and we saw the pipeline as I talked about earlier. We're talking about three submarine order, which should be as high as 27,000 to 30,000, which might go to Mazgar dock. The second indigenous aircraft carrier is under making by Cochin Shipyard, and also these companies are focusing on the increased share of the repair and maintenance of shipbuilding, which is a very critical and focused area by the government as well. And that somehow gives the sustained revenue and margins to the defense shipbuilding company. We talked about the large 50,000 crore order where L&T was a bidder along with a partner, and MDL was a bidder. So now these are all large scale orders where uh, I think the total would be more than 1 lakh crore anyways for next 1 year. So the pipeline anyways is very robust. All these companies, as I said, MDL is with 40,000 order book, currently going very strong. And the other three companies, including GRSC Cochin, also targeting very healthy growth. So I think despite these policy focusing on OM and O&M, which can be beneficiary to companies who want to get into commercial. So I think GRSC talked about getting into commercial shipbuilding for maintenance. And Cochin Shipyard has I think, more than 20% contribution coming in from the commercial or defense ship O&M. So I think O&M, operations and maintenance or retrofit for shipbuilding could be a big area where these companies can benefit from the current policy. But having said that, the shipbuilding defense policy is already robust, and there many orders will be cleared out in next 2 3 years for shipbuilders.
Okay, okay. Amit, let's talk about the second quarter, because brokerages, they are expecting that the revenues look strong for majority of the defense counters, but margins could be under pressure. Help us decode that why margins could be under pressure for majority of these defense counters.
See, I think if you see defense, typically 4Q becomes very lumpier with almost 40% of their revenue coming in 4Q. Q1 starts with 15% of execution. Q2 is typically 20 25% of execution, which is getting accounted. So we have to see defense as a cumulative way in terms of numbers also. There could be some quarterly variation. But talking specific to this quarter, I think if you see Q1 also, in few commentaries, including Bharat Electronics, they talked about because of supply chain, subsystem and component level, and to some extent, whatever critical material, there was 200 300 crore sales miss. For HL, it was engine. So broadly, if you see all this platform manufacturers, there's in proportion somewhat supply chain dependent, and that has been, be the reason for non-performance despite very strong book. But having said that, I think they managed Q1 very well, where the numbers came very strong and healthy. For me, the companies under my coverage, I'm expecting healthy number, except some margin normalization, which is happening also because of the some mix of commodity plus the supply chain. But I think that is not a major area of worry for me, because as I said, considering the traction which has happened and we are hearing for each companies, including the DPSUs and the private sector, I think they'll be able to manage to have very strong or healthy H2 this year as well.
Okay, okay, all right. Amit, I know you discussed about HAL as well, but any other
Yeah.
topics which you're eyeing from the defense back?
See, my coverage includes HL and Bharat Electronics, of which HL I think I highlighted. But if you see overall defense spec, despite taking my passive coverage, I think the few interesting companies which again will be beneficiary in the long term. Astra Microwave is one company which I personally feel that could be beneficiary in the defense electronics space. Data patterns, however, valuation looks expensive, but again, they have been growing very strong, and they have the potential if investors wants to have it with a 2 to 3 year perspective. I think these are two companies in private defense space. I think there's one company, not directly the so-called defense, but solar industries is very promising. They have market share, a very strong market share in defense. This company has been growing. Very recently, they entered into some other arenas in defense, and they seems to be on a strong footing. So there's a few passive stocks, passive coverage under my umbrella, and I like this companies personally.
Okay, all right. All right. With that, Amit, we have to let you go. But thank you for joining us and explaining us defense sector, so well. And hopefully in summer 2082, there is more upswing left in the defense theme as well. But with that, wishing you a very happy Diwali and the best of festivities.
Happy Diwali, and thank you so much for having me. Thank you.
All right, with that, we have come to an end of this edition of Closing Bell. Tomorrow, we'll be having more results reaction, so watch out for those. But yes, our Diwali special programming will continue, and you can watch out all the updates and stock reactions and themes that we will be discussing, because they have grabbed the spotlight for summer 2081, and how the way forward looks like for summer 2082 is what we will be discussing with our experts as well. But for now, it's a wrap from me. And before I let you go, let me once again introduce you to Moneycontrol Super Pro, which can be your ultimate investment superpower. You can get all the live trading calls and investment ideas from SEBI registered experts, pre-identified chart patterns, and AI-powered stock alerts right on your WhatsApp to help you trade and invest with confidence. So what are you waiting for? Download the Moneycontrol app today itself and subscribe to Super Pro.